How many times do novice traders actually take trades off just levels only for it to fail? What if I said that there was a key tool to help you avoid those trades? So in this video, I'll be going through auction theory and the 3 concepts that will help you be able to read the tape. And I'll actually go through a live trade that I've recorded to show you those concepts in action. Auction theory explains the fundamental reasons as to why price moves. And that's why it's so important to understand this when looking at the tape, because that's what the tape is. It's all the orders that are coming in and out of the market. Now, what you see on the tape, you only see the aggressive, or better known as the market orders. You don't see passive orders. So it's very important to note that, because it'll make a lot more sense when I show you an example. Market orders or aggressive orders is what actually moves, because they go to meet the passive sellers or buyers. Now, I want to give you an example of this really quick so you understand what I am talking about. All right, so let's actually explain it on what it would look like on the chart, right? Let's say price is right at this level. In the market, you will have passive sellers, okay? So these are people that are waiting when price gets to this level, they want to sell. And then you might have some passive buy orders where these are levels where people are willing to buy. They think this level is a good area to buy or to sell, depending on where you're. So these lines are passive sellers. So it's like your limit order, or think about it as your take profit. A lot of novice traders will look at it as their take profit, because a lot of the time that's when they'll use these limit orders. But it's basically at a level in which you're willing to sell or buy something and you're waiting for price to come to that level. You're not just getting in at any price, you're waiting for price to come to that level. Price is currently here. As you can see, in between this area here, okay, there's no passive sellers or buyers. What that means is if I wanted to aggressively buy, so a market order buy, I want to get in at the closest price to whatever it is at this point. If I were to buy, I have to meet that passive seller that's waiting up here to exchange, because at the end of the day, if I'm buying, I need a seller on the other end. If I were to aggressively buy again, I have to meet the passive seller at this level. Essentially, that would be my fill price. It would be at the passive level. It wouldn't be down here, my fill level. And that's why people talk about slippage and things like that. It's because you might want to get up in this price here, but unfortunately you get filled at this because that was where the passive order was sitting, right? So that's why sometimes you'll get filled, I guess, away from the original price you wanted. Let's say we are, instead of aggressively buying, we're aggressively selling. Now, normally at this point, there would be starting to be passive buyers, starting to come in here. And what will happen is if I wanted to aggressively, again, these are the only orders that we can see at this point, just to keep it simple. If we wanted to aggressively sell, we would have to meet the buyer at what they're willing to buy that off us for. And again, which causes price to move down, as you can see here. That is how you actually get movements in the market. That's why the candles print how they do. This is so important because so many people are taking trades just of random levels because there's a level there, right? This is why the concept of auction theory is so important, and understanding the relationship between those buyers and between those sellers, right? If you guys want another video where I explain this deeper, let me know in the comment section down below. But really, we want to be focusing on the tape in this video. Now that we understand the basics and understand why price moves, we'll talk about the 3 concepts that we focus on when reading the tape. Number 1 is speed of the tape. You'll notice the tape will slow down or speed up at certain periods of time. Now, if the tape is slow, it means that at this price level, there's not a lot of interest in the market. And if there's not a lot of interest, there's not a lot of movement, right? Now, if it's moving fast, that means there's a lot of interest. There's a lot of transacting. There's people thinking they want to buy at this level. They're wanting to sell at this level. There's a lot of interest going on around this particular level in price. This is seen in real estate auctions, for example, where you can see the auctioneer will place a bid or the starting bid and no one will make an offer. It's silent. No one's coming in and going, yep, they'll take that bid. The starting bid is too high. Nobody's interested in that price level. You'll notice what auctioneers will do is they'll then drop the starting bid And that causes people to start bidding on the house. They're interested now at that price level. So that's, I guess, a real life example of how we see that supply and demand work, because there's no demand at that higher price level. So the auctioneer drops the price of the house and people start coming in. There's demand at that price level. The second key concept is larger orders. This can help us understand where the big supply or big demand is. Think about it this way. Have you ever had your favorite product be out of stock forever, and then you go into the supermarket and find that there's stock? What's the first thing you do? People will buy 3 or 4 of them because they don't want to keep missing out. They just want to stock up so they can use that product, right? This is the exact same thing. The product, or in this case, contract, is in high demand. The third key concept is absorption. Now, there's a whole heap of aggressive orders coming into the market, but price isn't moving. It's an indication that there's passive orders absorbing those aggressive ones, which means that the level of demand and level of supply are balanced. We have a balanced market. This means no movement. The times that you get movement in a market is when there is not a balance between the two. This can indicate a reversal if we start seeing aggressive orders come in the opposite direction. But we need to wait for that momentum to come in first. So now that we understand the 3 concepts, let's actually look at a live trade example, because we all know that there's nothing comparable. Now, this is one of my most accurate, best trades that I've taken so far as a trader. So I'm really excited to actually share this with you guys. So I've marked up a level here. It's actually a 50% level. So right now price is around, I guess, the level that I normally look at when taking a trade, but obviously I haven't entered anything yet. As you can see, tape isn't moving that fast right now. As it dropped down there, it started to speed up. So I'm thinking that there is interest on the downside. What I normally like to see is a peak in volume before I take my trades as well. But also we're looking at the tape and trying to get these indications. You can see those buy orders are coming in, but price isn't really moving that much. But it's still not quite enough for us. Bam. 47 contracts got filled at 25,160 and price didn't move. I'm now starting to measure my stop. And as I do that, I see heaps of sellers come in and price is now moving on the downside. So I now go to enter. So you can actually see on the left side here that I've actually just entered into that trade. I'm setting my stop there. Now let's actually watch the interim of this trade. So you can see buyers stepped in there again, but price didn't move up much at all. As sellers start coming in, look how fast the tape starts to move here. Now we're at a standstill because we're at a bit of a trend line here. But watch what happens once we break that level. There's no buyers coming in though, so we're not worried, right? There's not too many buyers coming in, and when they do step in, price isn't moving that much. So I'm still feeling confident about the trade at this point. Heaps of sell orders come in, and look how it starts moving very fast. You can see the numbers start rolling here. More selling coming in. So you're seeing a lot more blocks of sellers coming in. That's showing as well more sell interest. And as we get those buyers stepping again, price doesn't really move. So as you can see, when those sellers come in, you can see that it starts moving a lot faster. The sell orders are a lot bigger. So we've got a lot of supply coming in, right? There's a lot of buy orders here, and I just want to explain something while we're on this. I'm going to pause it really quick. Just like everything in trading, it's in context. You have to understand context even when it comes to reading the tape. You can see we've just had a lot of buy orders come in at about 25,148, okay? Now, I want you to look at the actual candlesticks here because we've just passed a low, so we've broken structure. Now, if you went long at this higher low that you can see there, where would your stop be? Your stop would be below that low, right? So if you went long and your stop was there, you would be selling here, right? Passive selling because your stop loss would be there. what's on the other side of passive sellers? Aggressive buyers. So this is why, just because there was a lot of aggressive buyers coming in at this point, it didn't concern me, because what I knew from context is it's probably likely that we had trapped longs at this area, and their passive sell orders were getting filled as they stop, so they sell out of their long position, and the other side of that needs to be an aggressive buy. So I know that that could just mean that people are getting their stops hit. And in fact, this actually gets me excited because it gives price even more momentum to move to the downside. We saw a lot of sell orders come in here, right? And this would kind of push me to concern. And at this point, I'm going, okay, maybe I need to consider exiting this position, because we just had a lot of sell orders come in. And as you saw at that 25,150, price didn't move much, but look how many orders came at that level. The reason why I haven't exited the trade yet is because we didn't have buys come in. So we had absorption there, but we didn't have that follow through. We didn't have buyers step in and the aggressive buys of what we need for price to actually move. So at this point, I'm still not worried that price is going against me. A decent amount, but price still moved lower. Now again, few sell orders coming in there that are aggressive, and price didn't move as much at that level, but we didn't quite have enough buying coming in, enough momentum coming in. You can see, because I'm so far in the trade, I did pull my stop down to the left there, so now our risk is very small. If you guys want more videos like this, leave a comment down below, leave a like, subscribe, because it takes a lot of prep to put something like this out, but I just like teaching what I've learned along the way. Sped up here at this level, and it's telling me that there's a lot of interest on both sides on this level, and at the moment we're in a bit of a fight between who's going to win, and that's because we're at the bottom of a range, right? To be expected. Now just skipped forward a little bit here just so we're not sitting here too long. A lot of big sell orders coming in, and price is moving just how we want it to. It's responding to those sell orders. Level, but there's no buyers really stepping in. Heaps of selling coming in, but we're starting to slow down here. See how there's a lot of sellers, price is still struggling to move. It's not quite getting there yet, but we just broke past that range, so I'm being a little bit patient here and not just exiting right away. At this point, I'm definitely getting ready to though. You can see tape has just stopped moving. It's a point of balance. set myself alerts on my candle chart just in case it breaks the high of that candle. So as you see, I've just done that because again, I'm getting weary at this level. We're at the bottom of the range now and we're starting to fight. It's starting to slow down. There's not much interest, so we just need to see who's going to win. Is still coming in and price is reacting to this selling. Whoop. 70 orders just filled, as you can see there at 25 130. We had 70 orders and we're holding above that right now on price, as you can see on the left side, or oh yeah, you'll probably be able to see it best on the left side, that we held above it. Now we're getting buying slowly coming in. I'm just checking where we are. I want to see a bit more of a push on the upside. Bit more buyers coming in to confirm that that was absorption. That 24 order, massive buy order. And as you can see, I'll exit my position here. So I saw buyers coming in, but not only did I see buyers coming in, I saw a massive 24 contract buy order come in, and that was my quits. That was too big for me. And if we pop back, now that that is done, if we actually pop back to this trade, I exited here as you saw on the tape. This is my trade Zeller. Highly recommend to journal, guys, because you can't improve in trading without it. As you can see, this was my exit that you just saw on the tape there. Price rebounced. But what a beautiful trade. I caught the top of that move and I caught the bottom of it based on me reading the tape and me understanding the context as well when reading the tape. So there you have it. That's my entry model and that's how you read the tape. Now, just like anything, you still need a strategy. You still need to have something to go off, whether it's levels or volume. There needs to be other components to your strategy, but this is the entry component to my strategy. I use Trade Zeller, so click the link below if you want to use it. You can use the code NOVICE10 to get 10% off. Otherwise, I'll see you in the next video. Thanks. Bye.